What are we missing? When it comes to gold and silver markets, what are we not seeing? What is distracting us? What's stopping us from making smart investment decisions when it comes to putting precious metals in our portfolio? Let's find out. Welcome back to GoldCore TV. Today we have a very special guest for you, Stephen Flood, Director of GoldCore. I took some time out from producing our usual content to talk to him about his thoughts about what's going on in gold and silver and why he thinks that we're getting a little bit too distracted by all the noise that's going on right now. So just sit back, grab a cup of tea and find out what he thinks we should be focusing on and how we can best prepare ourselves for whatever lies ahead. My question is, when people come up to you, whether it's, at a dinner party or picking up kids from somewhere and they say to you, oh, you're working in gold, should I be buying gold? What is your message to them right now about what's happening with the gold price?
Well, those conversations have completely changed in the last year. I think we were talking about this before. We were having a laugh because we were always that kind of slightly extreme.
The mad one.
Yeah, that mad one at the end of the table, like, oh, there's the gold guy or the gold girl, and we were talking about, listen, you need to own gold because it's really important. History tells you it's important, but people didn't really pay any attention to us, and the reason was because most of our investment advice comes from product developers, pension companies, financial advisors, and the equity market is pretty much behind an awful lot of that, and they're always telling a story. And the story is that, you can get ahead by choosing this stock over that other stock, but they don't tell you, what actual long-term investing is about, which is really about diversification and having a portfolio that's kind of as close to all weather as you can get. And if you look at it from that perspective and you look at it over over decades and centuries, you can see a number of trends and themes that are there that would serve you well as an investor to look at. And the product pushers, the guys looking to make a commission, selling that next fancy bond fund or whatever it is, they don't tell you these things because they're not paid to, and the system doesn't reward that. So gold doesn't really pay very much in terms of commission, so in commission sales to large pension companies. In fact, most pension companies aren't even allowed to hold physical assets like gold or commodities. They're not even allowed by due to regulation. And so, yeah, I suppose the conversations I've had at those dinner tables have changed massively. People are now kind of perking up and looking at gold anew, probably because the price performance has been quite impressive. It's at the top of the league table, so it's kind of attracted people. But what I always tell them is, it's probably more risky to not have gold than to have it at the wrong price. And that means if you were to buy it today and it was to maybe move down in the next few months or next year or two, that wouldn't necessarily be a bad thing overall in the context of a diversified portfolio. And the reason I say that is because gold is not really there to make you money. It's there to allow you to save some form of value in your portfolio should the worst come to pass. And the gold price performance is really indicative of stresses in the system that are being priced in by certain actors. And in this case, in the last year or two, very much central banks are looking to add gold as a tactical asset to weather the de-dollarization storm. They don't know what's going to happen. They don't know how it's going to pan out, but they do know by having a form of money, the actual ultimate form of money, in their coffers, to hand, they're better positioned to get through whatever storm is coming. But as an investor, people at that dinner table, they also need to think the same way. They need to say, well, what sort of asset do I have that can actually preserve my wealth in times of uncertainty? Like, it's not always going to be good. The stock market's not always going to be at an all-time high. Your bank may not be there next week. I mean, I'm not saying that's going to happen. I don't want people to be scared, but you need to have these kind of extreme scenarios somewhat factored into your thinking. And gold as an asset is the only element that you can add that can actually preserve you from the systemic risk that is and should be in almost common asset classes such as equities and bonds and property. And so, yeah, so the conversation at the dinner table is changing. People are looking to add it. Companies are adding gold to their balance sheet, which is really interesting. They're looking at it as another form of currency. Why have all their reserves in euros? What is a euro or a dollars? What's a dollar mean? A dollar today versus a dollar, 20 years ago is very different in terms of what it can buy and its buying power. They're essentially being eroded all the time. And if you look at inflation, it's quite startling how much erosion is happening in our monetary system, in your pension, in your savings. And so people have to try and get ahead of that. So gold is something that can't be printed. It's indestructible, and it's quite unique. No other asset class is really like that. It literally cannot go to zero. You can't say that about any other asset class, maybe a property. And so, yeah, so it's really interesting. It's a great time to be alive, to be a professional in this industry. I love talking to customers. Those shows that we went to, it was just incredible. The energy, there was so much positivity. People understand it. Now, you do have to steer them away from that kind of near-term, well, what's going to make me more money, this option A or option B, and say, well, look at the big mega trends in the world. Like, we're going from a unipolar post-World War II order to a multipolar world. What does that look like for you and your job, the jobs in your community, and all the stresses in the world? Look at the environment, what's happening there. Look at the demographics. The replacement rate of our population in the Western world is literally cratering right now. So we have a number of challenges as individuals in the West, in our economies. And financially, you have to ask yourself, what are you doing to manage that risk? And hopefully nothing crazy will happen. We don't wish that, but we do want to encourage people to have that tactical allocation, like those central banks, of a percentage of their wealth in gold, and have it in a place that's not at risk of a financial event of some description. So yeah, it's a really exciting time. The shows have been brilliant, and those conversations are changing. They're changing now. People are saying, "Hey, listen, how do I buy, and why should I buy, and how does it work?" Because they're not educated. The system does not educate people as to owning precious metals.
And I think it's quite refreshing talking to those people, because you're right, the conversation has stepped up slightly, because it's not this "why should I buy?" It's I should buy it. But also, what's becoming clear to people is a lot of people have walked around going, gold's not for me, and it's not from a kind of decision to invest. They just don't believe that it's affordable, because they see the price climbing so much, and that goes up, and they go, "Oh, it's just getting too expensive." So there's also the conversation, I think, changed slightly for us, possibly from even a year ago, which wasn't trying to educate about why it was important to hold gold. It's now about educating that it is possible to hold gold.
Yeah, I mean, like I think that they're going into the practicalities of owning gold, as opposed to what is it? So they're getting into the detail, and that is, again, it's a foreign concept. People, it's not obvious how to own it, and when you tell people, like, this is not just a digital registration that you should be looking to take on, like buying an ETF, an exchange traded fund, which is traded in the stock market, and it conveys an exposure or an interest in precious metals, or whatever that ETF is representing in the market. Is that a good way of holding precious metals? Well, yes, if you're a speculator, you can go onto your trading platform, you can buy an ETF in almost any instrument out there. They're a fantastic innovation in financial markets. But if you're looking to get an insurance policy, a financial insurance policy that will deliver value and convey value to you as an investor, why would you want to buy an instrument, an ETF, that is very much reliant on the same plumbing, the same system that all the other instruments that are also plugged into? And if it's what if that system shuts down? What if it gets hacked? What if there's a major event in the world where these systems can't operate anymore due to some unknown, unexpected, what they call black swan event? If you have precious metals, you have a form of money to hand delivered to your home, in a safe, or even better, in a place like Zurich, or in Switzerland, or London, or Dublin, or somewhere in the world where you have vaulted gold in your name. I don't think you can have a better form of financial insurance there to back you up. So yeah, people are getting into the practicalities, and they're like, well, how do I own it? And we kind of steer them away from the ETF. We think that's great for speculation. It's a good way it's easy to get in and get out. You can trade it simply. But if you're actually looking at it from a bigger perspective, you have to own the physical thing. It has to be investment grade. It has to be bought from a professional dealer who's well established. And there are many out there, but there are also ones that you should stay well clear of. So talk to us, or talk to a financial advisor who actually understands gold, not someone who's going to pretend to. and get educated, and don't rush into anything. Don't feel you have to do it urgently. I mean, it's important to have something there. I do think everybody, as I say, should have gold and some silver in their portfolio. But if you're going in, educate yourself, read widely, read well, read quality, and obviously listen to Jan on the GoldCore YouTube channel. She's amazing. And do your research. But hopefully you'll find your way to our door, and we will look after you in that regard and help you on that journey. Because we really believe in it. We really believe in the mission that we have and what we do to help investors.
Absolutely. I think that the thing on the ETFs is it's just not the same product, really. I mean, that's what you hold ETFs, but you are not buying gold, physical gold, when you're talking about it. And I think that's a key thing, because people go, oh, well, my financial advisor says I can just buy gold this way. And it's like, you're not buying gold, really, particularly. And I think one analogy I always like to use on the owning gold thing is, you say like you're not kind of, it's not giving you a yield or anything, but it's a bit like you buy your home and you still have home insurance and you still want to be in that home and enjoy that home. And I often say, like you can take risks in that home. Maybe you're doing renovations, or just simple things like maybe you light a candle, you do small things in that home, you make small changes, knowing that you've got home insurance. So in case there's some kind of disaster or whatever, you have protection. And that's how I think about gold in terms of a financial portfolio. You don't just own the insurance and therefore nothing else. You still have a portfolio, you still have a home that you're living in, still making decisions, you still have a financial portfolio with which you maybe hold some other ETFs and stocks, shares, ISAs, whatever. You have that. But the gold is just sitting there quietly. Is that reassuring thing when it gets to 2 a.m, you're suddenly thinking, oh my God, what happens if the proverbial hits the fan? What will I do?
Yeah.
Gold, you've got gold and it's there just sitting quietly. And I think when it comes to kind of how accessible it is, a lot of people as well look at the gold price, and you have to remind people that is for an ounce of gold. There are so many different ways that physical ways in which you can hold gold without having to hold a whole ounce. You don't need to sit there thinking, I don't have 4,000 whatever dollars it is right now to buy. You can buy smaller coins, smaller bars. So it is, and again, it's just this education perspective, isn't it? And then to come back to what you were just saying there about, it's about having that kind of independence in your portfolio and that kind of that aspect of control. And that's why central banks are owning it. You alluded to earlier on, we've known each other for a really long time. And I don't know about you, but I still remember the moment that it hit me that this was what I wanted to do as a career. Like I wanted to work in the gold investment industry. And it was because I was at a conference and I was still at university, but I went to this conference and somebody said, I'm not saying exactly what the right money is, but it's the money that people choose. That's the right money. And people go, well, loads of people are choosing different money. They're choosing crypto or they're choosing to use dollars or whatever. But actually, talking about history, as we did earlier on, people come back to gold because there is a control there. There's a sovereignty there to using it. And that is when you talk about all the different things that are happening in the world right now. Literally point a finger anywhere and you'll find something that's worrying people. The reason people are panicking is because they feel out of control. They don't know what they can do about it. The problems that are going on are so beyond their scope of what they can do. That is, I think, it's not just about the price. That's why it's grabbing people's attention. But when you start talking to them and they realize that this is about individual freedom and sovereignty, that's really where the kind of the icing on the cake with it is really that's selling.
You're so right, because, and in fact, people go, oh, it's great. I made so much money on my gold this year, or it's gone up like 40%. And, I'm like, oh, stop. This is not what the outcome that you should be looking at is. The outcome is by having a form, having gold in your portfolio at whatever percentage works for you, you are taking an intentional act to manage an unknown set of risks in the future, which you cannot quantify today. And by doing that, you have reduced your anxiety. You've been proactive, as I say, intentional. And should the worst come to pass, you will be less stressed, more prepared than the average person. And that means that between this day and that, you can work on, think about things that really matter in your life, things that you have agency over, rather than thinking about things that are completely out of your control, beyond your purview, and getting just wound up about, the next climate change catastrophe, which you really can't have a major impact other than the changes you might make day to day. But you can work on the things that are important, like your relationships, your career, your education, your health, your well-being, all these aspects to life that are much more important, much more real today. So you're taking action today, and by doing that, you're improving your life going forward. Now, I'm not saying this is the miracle cure for happiness and everything like that. I don't want you to think that, but I do think there's a sensibility to this, that you need to be proactive, you need to be intentional. You can't just sit there reading the paper, looking at Instagram, getting stressed about the world or X or whatever it is, wherever you get your information flow, and being scared and living in fear that the sky is going to fall on your head. You should own some gold. It will act like an insurance policy, and its value will go up when things are becoming a little bit more uncertain. But then do focus on those things that you have agency, like I said before. And that's, to me, that's probably its most powerful effect it can have on you as an individual.
Absolutely. I want to just pick up on something you said, kind of it's about improving your well-being and happiness and your security. A lot of people, myself included, would argue that gold jewelry can go a long way to helping your happiness. But one of the things that we often hear when we talk to people that perhaps weren't initially thinking about investing in gold is so many will come up going, my wife's got enough gold, or they'll show us wedding rings and they'll say, I've got enough gold, that's my way of investing in myself and everything. I think there's a real there's a real divide there, a misunderstanding there about people think that when you're buying gold jewelry, and this is also a cultural thing as well, obviously a lot of countries and cultures do this, they believe that that is the equivalent of financial security, but that isn't something that we encourage people to do when they're investing in gold, is it?
No, well, we don't, and we have a Western bias here. But in cultures such as India, they own gold jewelry, bangles, and whatnot, and Diwali festivals is very, very popular. And that would be a form of investment for them. The price they pay is an awful lot less per ounce of gold in those jewelry forms than we would pay in the West. Jewelry is a beautiful thing. It's an art form, and you should have it. But I would not confuse it with an investment strategy in general. But you should look at it as gold as a commodity that you need to hold in a form that will actually also lend itself to liquidity. So with jewelry in the West, you tend to pay a huge premium, a markup of 100 or 200% over the actual content of the actual metal. So you're paying for the artistic merit as opposed to the content of metal. But if you have to think about, you're owning this asset, you may need to sell it in the future. You may not want to, but there's plenty of cases where people were able to smuggle gold with them across the border in order to get to a place of safety. And liquidity is really important. So it should be in a format that you can sell that's recognizable. And so investment grade gold, when I mentioned that before, that's what that means. It's going to be in a format of purity, via a manufacturing process that will allow the buyer of that gold to also then resell it in the future in a market where it's recognized. And so that's also important. So when you decide how much you want, you need to go through a kind of a strategy session with professionals, like somebody at GoldCore, and they will figure out what's important to you, and then they'll give you a list of options and ways to actually get that allocation made and realized. And liquidity will be one of the things we'll ask you about, like how long do you want to hold it for? What are the events you're trying to protect against? And then we'll tell you that maybe you shouldn't go for a large 400-ounce bar worth over $1 million or 1.2. You should be looking at maybe 1-ounce bars or even coins or sovereigns or something small or a combination. So it's important to get advice from people who've gone down this path before and get that format that really, really works.
I think the liquidity point there is really valid, because if we bring it back to when we were just talking about ETFs, so often, or talk to friends who are also, they're financial professionals working particularly, in investments or wealth management, and they will say, I don't want to hold physical gold because it's it's a physical asset. And of course, all of us have experience of owning physical assets, be it our homes or our cars. And the fact is, you can't just kind of decide, I'm going to sell it today and it's gone tomorrow. And I think there's that as a result has led to quite a strong misunderstanding of how it works when you own physical precious metals as well. But like you say there, when you are buying investment grade bullion, it is one of the most liquid markets in the world, which is so misunderstood, isn't it?
That's massive. You look at liquidity in terms of well, sorry, one of the measures of liquidity is, if you look at the size of a market, how often does it turn itself over every year? Now, I could be wrong in this, and I don't have the most up-to-date statistics, but like the equity market might turn itself over, 1.5 times a year, in terms of its turnover of trading versus the size of the market itself. And the bond market is even more liquid again. But the gold market is one of the most liquid in the world. I think it turns itself over about 4 times a year in terms of the total trading value versus the size of the market. Remember, gold is actually a very small physical thing. It will fit into a 22-meter cube. So you could fit that on a tennis court. It's the size of 2 semi-detached houses. Now, the population of the world, it's 7 or 8 billion at the moment. It's going to go to about 10 billion. Most of those people are going to be in Africa, India, China, and places like that. Not in Europe and North America. But those people have a traditional relationship with gold. And as monetary systems are coming under increasing pressure, you're going to find the price of gold measured in currencies is going, I would believe, will continue to rise. But is gold going up in price, or are those currencies going down? So I do think that when you're looking at gold, look at the long term, look at the price performance, and decide exactly what you need as an investor.
Yeah, and I think if we again bring it back to sort of what we were discussing at the beginning, you mentioned about central bank demand, and we are seeing this sort of real, I would say, like a trickle down effect in terms of the awareness about gold. And a lot of that is down to central banks. And we do need to ask, when you sort of say, if you're thinking about buying gold, look at like the long-term trends around it. Yes, the price, but also what's happening. We do really have to ask, it's not really why have people in a certain country been buying for generations. Today, we've got to ask, why are central banks buying really like they have never done before, if we look at it.
Yeah.
And that is quite that we do have to ask. And that liquidity thing that you've just asked, central banks aren't going to be buying some small illiquid assets. That's not the purpose of central bank functions. But they are also, that we are moving, I think, into quite a multipolar world, aren't we, in terms of what's going on. So why, if when we talk about those dinner parties or bumping into friends, when people say, well, why is it that gold is, I would argue, becoming the collateral of the future? Why is it that central banks are going down that path now? And why does that matter to me sitting here in my semi-detached house without any gold, for example?
Yeah. I think it's interesting. I think central bankers are the current crop have been forced into this situation because many years ago they kind of laughed at gold and they laughed at central banks of past years, and they believed in the Bretton Woods agreement where the dollar was king. We all related to it. It was backed by gold. Okay, that fell away in 72. So, but it's still looking pretty good. And they have this large military, and they believe in the global system of trade, and they're supporting the rule of law. They have strong institutions. So we'll attach ourselves to the dollar, and we think it's going to work out. And so in that regard, central banks around the world, would park a significant amount of reserves in the dollar because that's what they bought their oil in, that's what they traded in. Their banks, local banks, would have had used it in trading internationally. But that all changed. And it changed not just with Trump, but it changed, arguably it changed with, I think the Ukraine-Russian war was a major Rubicon moment for the dollar when, for the first time, and I won't count Venezuela in this because and Iran, but for the first time, a large quasi, superpower was suddenly had its reserves confiscated without their permission. And so what that meant is that the game changed, and suddenly that fractured the entire global alliance, where the dollar was king and everyone revolved around it. And since then, they have now had to go back to the old rule book and say, well, okay, how do we protect our national coffers from this changing world? And gold is the answer. Now, they won't say that out loud. They can't. But that is where the movement has come from. They're doing what they should do. Their remit is inflation. and jobs, full employment, typically. But now they're looking at kind of a global stability mandate as well, which is not really written down, but they find themselves where they are. And so gold is the answer to that. They're buying it not on a speculative basis, but on a permanent basis, because as I say, we're going to a multipolar world, and the dollar. And if we go back, so it's 22 years we've been in business, and we've watched many market cycles come and go, and typically gold went up and down with interest rates. As interest rates fell, gold came into favor because the comparative advantage of owning it versus not owning it versus savings accounts meant it wasn't a bad thing to have. But if interest rates went up, gold prices would fall because people would get a better return on the short and medium term with their savings in deposit accounts than they would with gold, where they were paying storage. So it didn't really add up, and gold would move, and then speculators would drive those movements even further. But now what we're seeing is not like a change in interest rate policy driving gold. In fact, interest rates, gold is decoupled from interest rates. That entire trade is decoupled, and that's one of the biggest stories ever. It's firmly focused on de-dollarization, and de-dollarization is an 80-year trade that is unwinding right now. This is a massive multi-generational change in the world economic order, and gold prices are moving on that basis. Now, I would ask you, people go, oh, gold's at an all-time high. It's not going to go, it can't go up much further. You know what? I don't know where it's going to go. And I actually would rather not look at the gold price, but actually look at where the dollar is going to go and the appetite for dollars internationally and central banks owning it. I think the trust has been utterly breached. I think people look at the United States and I feel very sad with the way the world is going and what's coming from Washington in terms of its institutions, in terms of its alliances, in terms of the dollar itself. And I think they're doing what they can to preserve, and they're going to wait it out and see what comes out the other side. But there are competitors to that reserve dollar mantle, and I do believe China have a number of things that they can do. The BRICS countries have a number of things they could do that could erode the dollar further. And I wonder, in that kind of crisis situation where debt servicing in the United States goes up and up and up, and people no longer answer the phone when Washington calls because faith has been breached. What do the Americans do? And it's terrible. And I think if you look back at World War II and World War I and the huge sacrifice that was made and the incredible work that was done by American diplomats all around the world, and it's not like Democrat versus Republican. It was an entirely different time. Those people are gone, and the people who are now in charge don't see the world in the same way. They have a much more insular view of things, and they don't see themselves as the world's policeman anymore. And they're much more transactional in how they do business, and they look at the medium term and short term and not long term. So I think the world has changed, and that's why central banks are buying gold, and they're giving up their dollars. And you see the United States going into a huge debt spiral, which is really quite scary. I was looking there just before we came on, a very real number, which is the percentage of the U.S. population that is on food stamps, and it was at like 6% in like 2000 and I think about 2015 or something like that, and it's currently up at around 12% at the moment, and it's rising. And if you go back to the time of the Romans, and we were talking about this before, the Emperor Diocletian in 280 AD, I think it is, when he came to power, the Roman economy was fairly poor, but it was not too bad, and he oversaw massive hyperinflation, which saw about the price of the local currency as measured with a pound of gold was about 50,000 denarii, and by within 50 years it had gone up 42,000 times to about 2 billion denarii with hyperinflation. And they tried to do price controls. They were messing with tariffs. They were messing with they had 20% of the Roman population was on food assistance, which is, the Americans aren't far off that now. No. And we're looking at potential hyperinflation as well. And I also think there's the whole crypto narrative is also related to this. And these are things that we've seen. There's nothing new today. We've seen this for thousands of years. These are human manufactured conditions and traits, and where it's no different today.
Let's just pick up on that crypto point, because crypto is something you and I get on very well, but sometimes crypto is where we perhaps have a little disagreement about in terms of what we think about it all. So, because you mentioned this to me earlier on before we started recording, and it's something I do agree with, which was the birth of crypto is basically like where we are unknowingly started to see a real uptick in debasement going on in the global economy. So perhaps you could just expand on that. It's a very valid point, and I think it comes back down to this: you often don't see what's going on whilst you're in it, and we are very much in a kind of crypto world right now.
Yeah, I mean, like there's a narrative there, and if you go back, I don't even know where I am on the political spectrum. Like I'm liberal, I'm conservative, depends on the issue. But I do like the libertarian mindset where you kind of less government, more individual control and power and agency over what you do. That sits well with me, but I do think the government has a role to play, and stability is one of them. Law, the rule of law and protection of assets. But yeah, crypto came from a really good place. It came from a kind of a grassroots experiment, in Bitcoin in particular, where they created a monetary system that was independent of the banks and the clearinghouses, and was run on the computers within a global decentralized network. And it was immutable, like it couldn't be changed, and it was mathematically rigorous. So and transactional, you can use it, you can transact with it. An amazing technology, and it is a technology. There are a number of drawbacks from it, but it empowered people. Now, I think in the last 5 years or so, especially when Bitcoin became tradable on the futures markets, Wall Street got its hands on the crypto narrative, and had since then it's been what you might call a pump and dump operation, where it's you have a lot of people talking it up all the time. They're very much vested. They're not even vested now. They're actually highly leveraged and vested. And there's an enormous amount of people making a lot of money, and also a lot of people losing a lot of money in that world. But it reminded me, and just to go back to the Roman Empire, at the end of the Roman Empire, the gold denarii coins, which were saw all throughout the empire, were made of tin and copper, had been debased. The gold had been pretty much removed from that currency. And I wonder, is the narrative now around crypto the same thing happening with our monetary system? People are actually debasing it by replacement, and telling people that this is the next greatest thing, where you have political actors actually promoting their own currencies and asking people to swap their after-tax income and put it into ethereal tokens, which are the promises that they're just going to go up. So it's the greater fool theory. And I think this is absolutely horrendous. It's shocking. And when you put actual acolytes into the systems of government, the institutions that are supposed to protect the system and to keep the wolves at bay and protect the little guy and protect the system, with the regulators, I just think it's a road to ruin, really. And unfortunately, it's the poor who are going to pay the price. You find people in poor countries in Africa and in highly volatile areas, and they're putting their money into crypto, whatever they can scrap together. And I ultimately think it's going to be a fool's errand, and they're going to be wiped out, which is really sad to see. And it's unnecessary. It's man-made. It's a total own goal, and it's greed ultimately at the end of the day. So yeah, I do think that that this has all happened before. It happened to the Romans. It's greed and incompetence wrapped up in a veil of political power, which is being misused greatly. And I think that's a big part of it. But I do think it came from a good place, crypto. But it's been totally taken over by interested parties.
That's the thing. I mean, you started off saying, you kind of from a libertarian perspective, Bitcoin it came out of a need. It came out of a need, a desire. And I also believe, I mean, I am a fan of Bitcoin, but I believe that it came almost from a sort of a misunderstanding about how we could use gold in the modern economy. So many people said this is gold 2.0. When it first came about, this is going to be the digital gold equivalent, because gold is bulky and we have to move it around and everything. Really, you can just apply the same kind of technology that was used, that is the blockchain. You could use that on gold should you so wish, if you wanted to kind of use it around the world and everything. It's the technology is fantastic, but it did come from this place of we need to take back control. And just before you and I were talking earlier on, I very randomly was looking at something Friedrich Hayek wrote in Road to Serfdom. And he was saying that the more government control that you have in the economy, then it destroys personal freedoms and individual, and it leads to, I think it was inevitable tyranny was the
Yeah.
line. And so that is kind of where we've got to with not just the financial system, but as we're seeing with the kind of the development of digital currencies, central bank digital currencies particularly, it is just an excuse for more control and more oversight over things. And again,
Yeah.
to bring it back full circle, gold is the one thing that you're not going to worry about what a central bank has decided to do with the value of that gold, next year, next month, whenever. It's yours. It's a borderless, faceless currency. And as we've seen with the likes of digital currencies and cryptocurrencies, you just can't trust that it's not going to end up in the hands of a system, as it were.
Yeah, and I think it's really important. There's an awful lot of people out there who want to personalize and label and attack and use, hatred and even victimization to kind of justify, extreme policies and policies and politics. This is it's a cycle that we're in that we've seen before, where debt gets out of control. Interested parties don't want to let go of the narrative. They don't want to admit that they're out of their depth. But probably the most important aspect to an awful lot of things that we're seeing and will see is the lack of individual responsibility, where people will go along and they will not question where their information comes from. They will not do the hard yards intellectually and understand and read well. They kind of get spoon fed the information, and they join communities of like-minded people, and they don't like other people who disagree with them. And I think it's really important. And when I say this, you have to be diligent and intentional, and you have to be exercised and do the work and read well and challenge your biases and seek the truth and hold people to account and get involved. That means getting involved politically, intellectually, whatever it means. But you need to mobilize. You can't take these things for granted. The system requires participation, and it's really important that people understand that on a community level, on a national level, and hopefully on an international level. But these are cycles. They're typically debt cycles and political cycles. And for the next leg up in what is in store for humankind, we probably need to go through a period of kind of creative destruction, where the system, which is broken and corrupted, is replaced by something new, and where lessons are learned, and hopefully we become more principled, like those people back in World War II, when they sat and they created a new global trading environment, which worked really well and lifted so many people out of poverty all around the world, and opened doors that had been closed before, and removed despots. But now what we're seeing is doors closing again, and despotic regimes coming. Truth is being attacked, and people are being silenced. I mean, it's absolutely frightening to see, and you're seeing it every day in the headlines if you just look.
Yeah, it's certainly, I was going to say scary times, but will be a bit more positive, uncertain times for sure. I think I'm going to leave it there. I think the overall, if we had to kind of put a headline to this, I would say it's about taking responsibility for what's going on right now, and for your portfolio, and for your personal freedom, wealth, for the freedom of your wealth, in terms of the control that you can have, and the managing it.
Yeah.
And we often talk about kind of reducing the counterparties, being as close to the assets as you can be. And so much about what we've talked about and what's actually ended up being a really nicely wide-ranging discussion is, how can you bring things back closer to you? It's something that you can trust, but you have to understand what you're doing. And so much of what's going on right now, we don't understand. And that's
Mm.
a huge part of when we talk about investing in precious metals is it's a really straightforward, long term, and not to kind of play it down, but it's a simple investment. It can end up coming down to being quite a simple decision, a simple thing to hold as well.
It is, and I think the term I always come back to that really rings a bell with people when I talk about it at those dinner parties is personal sovereignty. So by owning a lump of metal, and it's just a piece of metal, but it has a very specific relationship with humanity over time, and it's a constant relationship where it's seen as money, something to be saved and used when times required, across all cultures, all languages, all countries around the world. And it doesn't need to be plugged in. It's not part of any technology infrastructure. It is valuable for what it is. It's valuable for what it is not. It's not someone else's liability. It's not like a property that needs rental income. It's not like a stock that needs a dividend or another buyer. It just sits there and it gathers dust, but it's so rare, it's so valuable, it's actually indestructible, pretty much. It's born of the stars when they go supernova, so it's extremely rare in the world.
Yeah.
And you can put a little bit of that in your portfolio. You could bury it in your garden. You could put it in your pension. You could have it in your company's balance sheet. And when you do that, you become a little bit more empowered, a little bit more prepared. You have taken some sovereignty back from the system, and you're not all in on the system.
Absolutely. Thank you so much for joining us, and we'll hopefully see you next month. That would be
Yeah,
brilliant.
absolutely. And thank you for all your amazing work. I'm just so impressed with the videos you've done and the level of education. They're so genuine. I think people have really responded well to all your work, and it's just incredible to see. So thank you.
Thank you very much. Thank you. And we'll speak to you soon. Bye bye.
Bye bye.